Stephen, you're reporting a full year of results today for 2015. What are the highlights?
We're feeling very positive about how RSA is doing. And in our results today, we're able to show huge increases in profits and also well ahead, I think, of market expectations. But we're also able to show many other things that have been accomplished. And as a result of that, we're able to upgrade our ambitions and our forecasts for future performance. And so I think with these results, we can say that the turnaround period for this company is essentially done. Over 2 years, we have built very good foundations and fixed the things that were broken. The next 2 to 3 years are about outperformance, and we believe we can meet that challenge too.
As you say, there have been some significant improvements in operating and underwriting profits, indeed ahead of expectation. I mean, what has really driven that?
We've been working hard on several fronts. The key aspects of the turnaround before we get to performance were about fixing our strategy, making sure the company is focused on the things it's best at, and disposals have gone very well, and Latin America was the key last piece of that. About fixing our balance sheet, and we have great news from last year in terms of the final pieces of that, of disposals, Solvency II agreement, and also pension agreement. But then the performance, we're focusing on 3 things. Our customers come first. If you don't have happy customers, you don't have a business. And we're doing many, many things to try to make sure our customers are happy with what we do. We then need to be smarter at underwriting. Our underwriting losses have improved despite the floods in the UK at the end of the year, and our costs are coming down. And all of that adds up to a restored profit, big increase in profit for shareholders, and a big increase in dividend.
Now, I mean, the turnaround phase of the action plan, as you say, is nearing completion. 2016, apparently, the last year. Are you satisfied with what's been achieved, especially on costs? And can you give us an idea of what comes next?
What we're very much saying today is that the turnaround element of the RSA story has essentially been accomplished over the last 2 years. But lying ahead of us must be, in some respects, for shareholders anyway, an even more important phase about outperformance. The foundations we've laid in the last 2 years, together with the work ahead of us, we believe can take RSA from a company that is now back in the pack of competitors to at the front of the pack of competitive performance. And that's why we have upgraded our forecasts of profitability. We've upgraded our targets in terms of how much cost we can save, and we're going to be working hard to make those outlook statements come true.
Now, you talk about RSA's place in the pack and that you've moved well back into the pack, but how do you really become best of class?
One of the most important changes that we are making at RSA is to remove any sense that being in the pack is good enough. We have a company that, if it operates to its potential, can be at the front of the pack, can be a leader in our industry. We need each and every one of our people to get behind that and make it into reality. And so our ambition, our colours are pinned to the mast of best in class. We're setting out today a new vision of how we might get there from an improved base, and that's what we'll be driving hard towards.
Can I come back to risks? I mean, you're saying that you've removed significant risks from the business. I mean, how have you done this?
Any discussion of risk, particularly in a very volatile world, has got to start with important caveats. You know, there are tough headwinds facing the world economy. There is a lot of market volatility, which is dangerous, especially for insurers. And it's a competitive world. We have lots and lots of people trying to take our business, and we're trying to do the same again. So all of our plans rely on self-help, not on a lot of help from the outside world. And we have to expect that there can be unexpected things that hit us and hit our competitors in different ways. So I would never be over-optimistic when it comes to risk events. That said, as it relates to RSA, we had a number of important risks. The first risk was we were spending our time in areas we weren't going to be successful, and so the strategic risk, I think we fixed by focusing this company down to its 3 most important businesses where we can be the most successful in the UK, in Scandinavia, and in Canada. The second set of risks we had were about our balance sheet not having enough capital, having risks in our balance sheet that were not well supported. You can never eliminate risks as it relates to balance sheet if you're a financial institution, but we're now back in a solid position. The credit rating agencies show that with their upgrading of us. And then finally, there's performance risk. Can we meet the needs of our customers, and can we translate that into something that our shareholders find attractive? And of course, that's a risk you have forever, but piece by piece, we're improving the quality of what we do. We're improving the base in terms of underwriting, in terms of reinsurance, in terms of cost efficiency, and in terms of management capability. And those are the things that I think give us a bright future.
But setting that against the challenging market conditions, the economic headwinds, I mean, how confident are you and your leadership team about the future?
We believe that this company can get better every year for the next several years, and that we can start moving towards the front of the pack. Our ambition is to get to the front of the pack. Maybe we'll fall short in some ways. I hope not. We'll try not. But we feel quite confident that we can move forward in a world, of course, that will throw some curveballs at us and everyone else in one way or another.
So the total dividend for the year is going to be 10.5 pence. How does that align with your dividend policy, and what can investors and shareholders expect in the future?
While we're happy to produce a dividend of 10.5 pence, which is of course way higher than last year, it's no more than a down payment, because this company should be capable of giving to shareholders a much higher reward than that. But what we're very clear about is that reward has to follow performance and not lead performance. The performance has improved a lot, which is why the dividend has improved a lot. We think our performance can improve a lot more, and together with a capital position which should be tidied up and finished in terms of the improvements we made this year, that will allow higher dividends in the future.
Stephen, thank you.
Thank you.